Zoom recording. All right, so thank you for your patience. Hi everyone, thank you for joining today's trading room. My name is Yaniv, and I'll go through the majors today. If I find any opportunities to open a quick trade, I will, but I'll first go quickly over the majors on high level, daily, or 4-hour charts. Of course, this trading room is for educational purposes only. I'm not advising to open or close any positions. Of course, if you have any questions, feel free to send them in the chat box, and preferably send them to all panelists and attendees, not only to panelists, so that other attendees can see your questions as well. So without further ado, let's start with the euro dollar very quickly. And as you can see on the daily chart and even on the weekly chart, it's still moving within some sort of a range or a triangle, but seems like it started breaking below this trend line, this upper trend or lower trend line, but the incline trend line. It closed below it last week on Friday, and we'll go maybe over the Dixie later on TradingView, but it closed below, and now this trend line, if indeed it stays below this trend line, it may confirm the breakout. Preferably, obviously, we want to see another daily candle closing below, not just last week's candle. It can always close above again and make a false breakout. But if you see the price coming up again and testing this trend line and testing the previous level as well of, let's see here, around, let me just make this line thicker. If you see this level of around 117.66 or so, as you can see, it's being tested now. It's the previous horizontal support line, and we also have this blue trend line which was broken, and the moving averages above. So if the euro dollar continues moving sideways below this broken support line, it might continue lower with this moving average pushing the price lower. So euro dollar, obviously the overall trend is still well, sort of bearish to sideways. We need to see previous lows being broken and closed below in order to confirm a bearish trend. The daily chart is quite bearish, but I would prefer seeing, in order to really confirm a lower low, I would prefer seeing this entire demand zone, this green rectangle, being consumed and broken. And then if euro dollar closes below 117, then we're officially in a downtrend. Okay, lower highs, lower lows. This will confirm the downtrend. And as I've mentioned in previous trading rooms, euro dollar is coming from the supply zone on the weekly and monthly chart, this blue rectangle. And let me just show you my mouse cursor. Okay, so you can see that the euro dollar is coming from this supply zone, and probably even about maybe to confirm a double top. So again, closing below this level of around 117, 116.50 to 117 will confirm the double top, and also, as I mentioned, will create lower lows, lower highs, and then an official downtrend. So for the coming week, I would look for an opportunity to go short either around 117 or 117.80 or so, just below this trend line, which has been broken. Again, this blue trend line, as you can see, it's been tested and last Friday broken. Okay, pound dollar on the weekly chart, also coming from a big supply zone, a very big supply zone with a lot of strength a few weeks ago. It found support on the weekly 50 moving average, okay, the exponential moving average 50, and made a one reversal candle, but last week it didn't continue higher. I'll make it even bigger. As you can see with the moving averages I'm using, at least the 9 EMA, 20 EMA, 21, 20 or 21, it doesn't really matter, and 50. You can see now that it's right in between the 9 and the 20 or 21. It found some sort of support there. The moving averages are serving as dynamic support, and now, you know, on the daily chart, the trend is still not very clear. We see lower lows, but we see higher highs. So the trend is not super clear. I would prefer with a pound dollar, if you're looking for trades, to wait for some confirmation either to the upside or to the downside. Is it Quasimodo? I'm not sure. Well, again, it formed a lower low here, so it's sort of Quasimodo, but it's not a perfect one. Yeah, yeah, maybe a Quasimodo, something like that. In any case, just pay attention to, and I've mentioned it last week, I think it was, that the fact that the pound dollar broke below this support line here, below these previous lows, it broke below it, but it didn't confirm. We'll talk about Quasimodo later, Jefferson. It broke below, and by the way, there are excellent webinars, I think, on our YouTube channel by Gil, our the CEO and founder. He's talking about Quasimodo. You can also read about it on our blog. Lots of material, but it's, well, I'll discuss it later. In any case, we have a break below the previous lows, but in order to confirm a breakout, we always want to see at least two candles closing below the support line, which was broken, or two candles closing above the resistance line, which was broken. Only then is the breakout confirmed, and then we want to see maybe a retest of the broken line before entering in order to improve the risk-reward ratio. So in any case, pound dollar at the moment is not very clear. It could, you know, continue lower after coming out of this supply zone, but the rejection here 2 weeks or 3 weeks ago, the confirmation candle, not a perfect confirmation candle, but still going above the two moving averages and now finding support on top of them, makes me hesitate or wonder where pound dollar is going next. And it could be like sort of a flag right now, like sort of a flag with this pole, and now the, well, sort of channel that you can see here. So this could be a flag. And if this is the case, then the flag is a bullish formation. On the other hand, we have here strong, you know, like sellers coming, and it's in between the moving averages. Just pay attention. If it's head and shoulders, not, well, I wouldn't say it's a well, it could be if we If we draw the lines more or less like this, and then let me just, I mean, it could be in a way like left shoulder and then head and then right shoulder. It's possible. I'm not saying it's not. The head is quite long. Let's say that if the pound continues and the right shoulder doesn't take too long to form, it's not too long, then it could be. It could be, but it's too early. I agree. It's too early. That's why I'm saying it's at the moment pound dollar is not very clear. Okay, and I see some of our traders are getting whipsawed with trades on pound dollar because the trend at the moment is not very clear. They go long, then it goes down, they close, they go short, it goes up, they close again. So if the trend is not very clear, just wait for it to get more obvious before you see, because there are lots of, I mean, intraday, maybe on the lower time frames, you can take some nice trends, but you see, you think it's breaking down, you go short, it goes up, you close, it goes down, it goes up, not very clear. So just be careful when the trend is not clear. And there are plenty of other pairs you can take. Dollar yen as well. Looks like it's like on the weekly chart, it looks like it's you know, well, I thought like a few weeks ago that it broke above this level, but it made a false breakout. That's why I also said that we want to see a clear close with clear candles closing above previous level. Okay, in this case, maybe even this previous high, you can see that it formed a bearish divergence. So it could continue lower. I remind you, this is the weekly chart, and the divergence might take time to evolve. But the moving averages are still in an upward trend. It's still, they're still giving support to the dollar yen. So, and on the daily chart, you can see that the trend is very unclear. Lower lows, lower highs on the one hand, but still lots of support and demand areas around here, and we have demand also around here, and we have demand here. We have lots of demand below, and you know, it could be this sideways bearish movement could be just compression before continuing higher. So pound dollar and dollar yen, I wouldn't say they're very clear, and therefore pound yen as well is not very clear to me. And I prefer refraining from trading, at least swinging on these pairs, as long as the trend is not very clear. So that's for the dollar yen as well. But if you go on the shorter time frame, those of you who are trading dollar yen on the shorter time frame, we have demand here, and a potential support around here as well. Pay attention to this level of resistance, okay? And of course, you have all these supply zones around here. This supply zone was pretty much tested or almost tested. Just as you can see, demand below, supply above, support, resistance. So either take very short trades, okay, or just look for other pairs to trade if you're swinging. Dollar Swiss made a nice move up in the last few days. The demand zone is here and it hasn't been touched yet. I was actually quite surprised that it turned around even before touching supply, but maybe it just found some support around this level and didn't go all the way down to demand. Obviously, if you're trading dollar Swiss, pay attention to this trend line, which might serve as a resistance right above. So you have trend line and you have this intermediate supply above as well. So you can see here the supply was formed. Let's go even to the 4-hour chart to have a look at it. Okay, so you can see the zone. You can see how it's almost been tested or touched almost to the pip, and then broken down below. And if it goes down, this is where the new demand is formed. Okay, so again, as you can see, a consolidation in many pairs moving in relatively tight ranges. Dollar CAD. Dollar CAD, very interesting because there was, why do I have this blue rectangle here? I guess it kind of moved away. So we have this, well, there was this demand around here, this demand zone. Okay, from this area, which was tested in the past, went all the way up and retested again and made a beautiful price action. You see here compression. This is the weekly chart, but you can see this compression. I spoke about it a few weeks ago on one of the trading rooms, but there was very nice compression into the demand zone, sort of accumulation or distribution of the short positions and accumulation of long positions. And then I don't know where all these lines came from. And then it started moving up, sort of like a rounding formation from the demand zone, and went all the way above the moving averages, came back to retest the moving averages. I spoke about it in on one of the webinars. And then the moving averages, instead of being dynamic resistance, once breached, you see here, the moving averages, the short ones, 9 and 21, are breached. The price goes down, served now as dynamic support, breached again for the long moving average, tested here, and now you see how they serve as support until they're broken, and then now the price is ranging in between. Again, go to the watch the webinar on our YouTube channel. I think it's called Patience Pays. That's the webinar where I speak about supply demand, moving averages, and so on. So now on the week chart, you can see how the same pattern, just like here on the daily chart, you can see how the candle pierces through the moving averages and then tests them back. The same thing on the weekly chart. The price pierces through the two moving averages or breach it. In this case, the 9 EMA is tested, then both of them are tested, the 9 and the 21. And if the price moves up again, then probably the 50 EMA will be tested for support as well. So you can see beautiful price action on the monthly chart, where the, well, here the demand zone is the weekly chart, but still you can see the test here with this beautiful candle, the spin bar, and how the upward movement was formed gradually, but still came. It hasn't tested this zone until a couple of months ago, and now it tested it with this bullish engulfing candle. So this bullish engulfing candle is where it gives us some confirmation for the demand zone. And yeah, this is actually the confirming price action for the zone. And I'll speak about the Dixie, the dollar index later on. We can see that generally dollar index as well made a retest and a double bottom from the demand zone, and the dollar generally against many pairs could go stronger, could become stronger across the board. So dollar CAD is a nice presentation of price action from demand zone, from in this case the weekly demand zone. Aussie dollar on the, let's quickly go to the weekly chart. You can see here how it's testing this level. Well, there was some sort of demand here, a very local demand. It's still moving sideways and it could still break lower, but there is a temporary demand from here. You see the candle wick here. So this temporary or daily demand is now still holding here on these candles even today, but the moving averages are still pushing lower. You can see that the 21 EMA or the 20 EMA is still holding above, still pushing the price, and now the 9 EMA could serve as dynamic resistance as well. Have lower levels. Let's go here. Okay, we have this level. You can see this support level, which was resistance, then support. That could be potentially the next move if Aussie dollar breaks. Barry, thank you. Audio is going and coming. Okay, I hope it will be more stable. If you didn't hear something and you want me to repeat it, just send me a message. I'll try to speak more slowly. Hopefully, the dollar is consolidating, okay, and could move lower. But if it reaches above, if it reaches above this level of 0.74, this resistance line, if it closes above it, then we can see it, then we could see it moving even higher towards this area here, okay, where the 50 EMA is and the previous resistance is. But if it closes below 0.7330 or so, it could continue lower all the way down to 72.30 or 72.40, which is like a 100 pip move. So that's for the Aussie dollar. Quickly to the Kiwi dollar, which also made, like you can see here, a false breakout, just like the pound dollar. Okay, so again, every time you see a breakout, you know what, I would, maybe it's not a, I mean, it's breakout relatively to the previous low, but I think, well, you can draw several lines here, which makes me think a better thing to do is to draw a zone, because you can see that there was some sort of yeah, like it's in between two lines. So so there is some sort of a breakout and then breaking up again. The breakouts are not very strong, not very clear. And the EMA, I'm using exponential moving averages, 9, 21, you can use 20 as well, and 50. Okay, but they're all exponential moving averages. Okay, so as you can see, at the moment it's consolidating below on the weekly chart, just in between moving averages. Trend is not very clear. There are some buyers coming in. It could form a move up. You can also see some divergence here. So we could see Kiwi dollar moving higher, but obviously on the daily chart, the trend is not very clear. If you want to have confirmation, at least for swingers, for Kiwi dollar to go long, I would suggest to wait until the daily candle closes above, more or less above this area here. Above the moving averages, even the 50 moving average closes above, at least above this area here, before you go long swing. Obviously, if you're going on shorter time frames, then pay attention to this this supply zone here, very strong supply zone. So those of you who are looking to go long, first make sure that you don't enter right into a resistance line or resistance trend line or supply. If you're looking to go short, then be aware of the demand zone. But again, on on the medium term, the trend at the moment is not very clear, and I would prefer, seeing the Kiwi at least choosing one direction. Yeah, it's right in between moving averages. It hasn't made clear lower lows. Obviously, no higher highs. It's just ranging. Euro pound is interesting because this demand zone has been consumed and has been broken, and you can see that overall the trend on the weekly chart is bearish, and I think it's headed towards this lower demand zone, which is somewhere around 100 to 200 pips below. It's a wide demand zone on the weekly chart. So if you're looking to go short on euro pound, make sure first to enter at previous resistance or previous supply. So it could be somewhere around here. Okay, you had support, which was broken, tested. You have moving averages. So anywhere around this previous resistance line or the moving averages, if you find that they're serving as dynamic resistance above. If the price goes and remains below the moving average and then forms some sort of a reversal candle, like a star, a doji, or some candle that gives you confirmation or shows you that the price is turning around, wait for these levels, okay, for resistance or dynamic resistance with a moving average. But it looks like the general trend of euro pound is down, as you can see. Again, at least according to the broken or the consumed demand zone. If we're looking for strict confirmation, then we need to see the previous low being broken by 2 closing candles. So if you're strict, if you want to have higher odds for confirmation, wait for 2 candles to close below, let's say 1 candle closing below another candle closing below, and then a retest of the broken level, and then you can take the short around here, maybe a starter position if the candle is too strong, if you're not sure. But basically, it's much safer to take the position around here after retesting, because then you can place your stop loss a few, maybe 30, 40 pips above, with a potential reward of around 90 to 100 pips. So that's a good risk reward ratio for Euro Pound. Let's see if you have any other pairs. Okay, I'll quickly go over some yen crosses, but if you want to discuss any other currency pairs, write them down. Okay, so I'll get to Swiss yen right after Euro yen. Let's have a quick look on Euro yen. So this is the demand zone from around here. You can see it's been tested. Obviously, overall, the trend is down. The overall trend. There might be a temporary support from this trend line. Let's you can draw it on the 4-hour chart. Something like that. Okay, so that could be temporary support. Just pay attention. And it's not only support, there's also some sort of demand here. So if you go short, preferably wait for the price at least to close on the hourly or the 4-hour chart to close below this this trend line, because you have plenty of demand or support around here. But the overall trend looks like obviously bearish. It could find more support around the 50 EMA on the other, the 50 EMA on the weekly chart, where there is also, you can see here from this candle wick, where there is also previous demand or pressure from the buyers. Okay, so just pay attention to this zone if you're going short. Swiss yen, obviously the Swissy is a little bit stronger, so you can see that here it's not below the moving averages like we see on the euro dollar, like the euro yen, and on the weekly chart the trend is even, well, sort of an upward trend still. Okay, but we have a very, very strong bearish candle from the sellers, a very strong supply zone around here. This bearish candle doesn't leave much room for for doubt. The sellers came in here very strongly, and the pair is expected or could continue lower. How much lower? Obviously, we have some. Let's draw this here. We have this support level, a strong support level. You can see it from 2018 and then 2020. This is the weekly chart. Retested a few more times, breached, and then a retest after breaching, and a move up. This is classic. Okay, beautiful, beautiful move. And you can see how when this level was broken, we have one candle closing above, second candle closing above, third candle closing above still, and then going long. And for those of you who say, okay, but these candles are going down, I'm not sure, you can always say, after breaking above this level, you can say I'll go long only after above this high. Okay, because this is where the buyers manage to go. If they continue above this level, then I go long. And then on the daily candle, on the daily chart, you can see how it was breached with a strong candle, retested, intraday retest, and a move up. Beautiful confirmation. Okay, and from there on, the 9 EMA served as dynamic support. You have a flag here, another flag in a way, another consolidation, and here it's starting to get weaker. As you can see, the moving average starting to break down, and of course, this engulfing candle says this is a warning sign. This says the sellers are here. Okay, this is an engulfing candle. Obviously not a perfect engulfing candle because we don't have many gaps in the Forex market because it's a 24-hour market, but still, this is a big warning sign with this candle wick and an engulfing candle. Those who are still long should exit here or at least move their stop loss below or maybe below the 20 moving average because this is a warning sign. But again, this is for those of you who are swinging and looking for confirmations. You see how patience pays when you wait for a breakout, you wait for a retest. I'm not saying trade the weekly candle, the weekly chart, but on the daily chart, you can see how it plays out after retesting or breaking above the breakout candle, retesting it. This is a perfect example. So as for your question, Bob, for Swiss yen, now that it's breaking or has broken below the moving averages, I would say looks like the sentiment is more bearish than bullish, but obviously you have plenty of support around here, and of course this whole demand zone around here. So for intraday, if I were to look for positions, I would say I would wait for the price to show clear signs of where it's going on the hourly or 4-hour chart here, because there's demand here. Okay, if it breaks below, let's say even on the hourly chart, if it closes below and retests this area, I would go short here with a stop of around, I don't know, maybe even above this candle, something like 20 pips with a potential of at least, well, first target is around here, 20 pips, but the better target is the demand zone below, which is around 60 pips. Okay, so yeah, we have another demand here, but this is an intermediate demand. It's not I wouldn't say it's a very strong demand, although it could stop the price here, but the better demand or the better target is just below. Okay, so this is an idea for day trading or short swing trading, just below here with a target down there. That's for the Swiss yen. Pound yen, I've already said, not a very clear trend at the moment. So I would wait. Same for Aussie dollar, which looks like it's forming maybe a pennant. And pound Aussie, we'll look in a minute. Just a sec. Okay. So this is the Aussie yen. So again, I would wait, but again, I think the sentiment is overall bearish on the one hand. On the other hand, I would like to see this demand zone breaking below if for the short side, obviously, again, for swing trading, not for short-term trading. For short-term trading, just, I would wait at least for the 4-hour chart to pick direction. Okay. Pound Aussie. Let's have a look at the Pound Aussie. Ooh. Yeah, Pound Aussie was I spoke about it last week because it was, the trend is very, very strong, or at least has been strong up until last week or the beginning of the month. The fact that it made not a very strong, but some sort of an engulfing, bearish engulfing candle may suggest some corrective moves ahead. And you can see that the daily candle, the day hasn't ended yet, obviously, but this daily candle looks like it's coming from supply, this entire supply zone. So it touched the supply, and came back down. And as long as it remains above this trend line, as long as it remains above this support, or even better, this demand area, okay, there's a very strong demand zone here. Why? Because of this very strong bullish candle, okay? Obviously, the buyers were waiting here. And I draw the demand by connecting the bodies of the two candles, okay? The candle from which the buyers came, and the previous candle, the open of the body in this case, okay? So this is where the base, or sorry, the top of the demand zone and the bottom of the demand zone is right, one sec, is right at the bottom of the bearish candle. So this is the demand zone. The Pound Aussie can find more support from this moving average as well. Okay, around here. So you have, yeah, I would say around this level, you can find some support as well. You can see here, there was support, and the moving average may serve as support as well. So this is sort of an intraday support, but the stronger support is from this trend line, and obviously this demand zone. If Pound Aussie goes all the way down to this demand zone and the 21 moving average, if you see here some consolidation, or that the Pound Aussie is finding some support here and forming maybe a reversal candle or hesitation candle, that could give you a nice entry area. However, it obviously can go even lower to this area, okay, this support area, and you have also this support line. So obviously plenty of support. How do you know where to enter? You wait for the price to give you a hint, to give you a clue. CN, when you say overextended, you mean overextended to the upside? Could be. On the weekly chart, as you can see, it's quite far from the moving averages. So it is on the weekly chart. It's definitely overextended, but there's still more room to go up. It could go lower, look for or consolidate around here, waiting for the moving average to come closer before continuing higher. It is a bit overextended, but look how nicely, again, this pattern of the one big candle crossing, crossing through all moving averages, going higher, coming back to retest and fighting support on this 9 EMA. That's a very nice pattern, and it repeats itself over and over again. So that's for the pound Aussie. I want to quickly discuss the Dixie, the dollar index, and maybe a few words, or at least show you, where you can find a Quasimodo. So let me stop the share for a minute and open. Let's just open a new tab. 1 second. Let me find the. Okay, so let me show you the dollar index. On the weekly chart, and give you some material on Quasimodo as well. There's a lot. If you write Quasimodo on Quasimodo, the 5ers at the on Google, you can find lots of videos, because it takes a little bit of time to explain. Yeah, I'll share my screen in a minute. 1 second. So let me just share my screen first for the Dixie. Okay. So you can see the screen here. Dollar index. Dollar index is on the weekly chart, on the monthly chart, you can see that there was a resistance area or resistance line around almost 89, around 88.50 or so here in 08 and 09 or 2010. Strong resistance from which the Dixie went down. It breached and retested again in 2018 when the market went down in 2018, and went all the way back up, and now it's being retested again. And you can see there's a demand zone here on the monthly or the weekly chart. Let's just make sure you see the mouse. Okay, there's a demand zone here on the monthly and the weekly chart. Okay, and on the weekly chart, from this demand zone, we have a potential double bottom. Okay, potential double bottom. Why potential? Because in order for the double bottom to confirm, we need to see a close above the the middle of the pattern, okay, of the W pattern, around 93 to 93.50. So I want to see the Dixie, the dollar index, closing above this area, and then the potential move is all the way up to 96.50. Obviously, and what else you can see here, that on the monthly chart you can see an engulfing candle. So we have price action from demand zone, bullish engulfing candle, and you can also see some sort of on stochastic. You can see from between these two bottoms, you can see bullish divergence. So there's definitely some bullish sentiment for the dollar index, and if dollar index goes up, it means probably euro dollar, pound dollar going down, Aussie dollar going down, dollar CAD going up. Oil, by the way, is going down a lot. So with oil going down, with commodities going down, we may see Aussie and CAD going down as well against the dollar. And if the markets start going down as well, we could see the dollar gaining strength even more. So that's for the dollar index. Quasimodo, can you see my can you see the chart here, the 5ers site? So basically, for the Quasimodo, if you want to read about Quasimodo, you can search on the site, go to the blog and search for the tag. You can see here the 5er/tag/Quasimodo, or just look for Google, search on Google for Quasimodo and the 5ers, and you have a lot of material here, but very quickly about, and you have obviously videos, but very quickly, Quasimodo means that you have a higher high and then a lower low. Let's see, a more classic here. Yeah, a more classic example. So you see here that we have a higher high, sort of a breakout, and then the price is going down, forming a lower low, okay? But this lower low didn't hold for long, and the price went back up towards the supply level. So it's called Quasimodo because it's like tilted or like the shoulders are somewhat, one shoulder is lower than the other shoulder in a way, like the figure of Quasimodo, but the fact that there was a lower low, there was a breakout, and the price came back above the breakout level, means that that the in this case the sellers like breached or opened the way for further selling or further downside in the future. But before continuing lower, it's going back to visit the supply level, the level from which the breakout took place. Okay, the power of the sellers came from this level. The sellers were strong enough to break previous low, but now there's a retest from the of the supply level from which the move came before continuing lower. Again, there are lots of videos, lots of material, lots of explanation about Quasimodo trading strategy, with written material and with videos. Okay. It's a reversal pattern, and yeah, you see it creates a new high, which is higher than the last one, but eventually with a bearish momentum after there's a sharp movement downwards in the case of a bearish Quasimodo, and to form a lower low. Anyways, this is it for today. If you have any questions or anything else you would like to ask, these recordings are on the website or on the yeah, you can get a push notification from the website, or also go to our YouTube channel, and you have it here also. Okay, so you can go to the YouTube channel or look for materials in the on our site. Okay, and if you want to reach us directly or want to reach me directly, just send an email to support, ask to speak to me if you want me specifically, or if you want any of us for support, just you can send us an email or contact us via the contact us form and ask to speak to one of us, or to reach us directly. Push notifications when you go to the website the first time, it asks you if you would like to receive push notifications from the website, and it will, anytime we release a a notification about a webinar or about a new video or about a new blog post, you can get a notification from the website, and you can see it here. Okay, if you press on the lock icon on the browser, at least on Chrome browser, you see notifications and you can select allow or ask or block. Okay. How do you know when the free valuation comes up again? Well, I'm not sure when the free valuation comes up again, or if it comes back again at all. Maybe it will. Maybe we come up with another plan, a different plan. So we will of course inform about it, but at the moment we're not planning to bring back a free evaluation again. Who knows? Maybe, but I can't promise. And can one trade only with candle pattern? Of course. You can trade naked charts. You don't have to have moving averages. You can trade only patterns. You can trade only supply and demand. Many people, and even Gil, the founder, trades naked charts with supply and demand as well. You can trade patterns, yeah, head and shoulders, or double tops and bottoms, or flags. Flags are great to trade as well. There are lots of strong patterns. You can trade breakouts just by, like I said, waiting for a breakout, for a confirmation, and then a retest of the breakout level. It works so many times that it's, you can just trade breakouts by waiting for the confirmation and the retest. If you have patience, you can, patience and of course good risk management, you can make a lot of money just by trading the breakouts. Regarding news trading, is medium impact news allowed for summer challenge? Yeah, basically if it's medium. Yeah, I'm not a big fan of news trading in general, but if it's medium and you want to trade it, it's allowed. Yeah. Any other questions, guys, girls, ladies and gentlemen? Thank you very much for attending today's trading room. I thought I would have time to maybe look for an intraday position, but well, maybe next time. So thanks again. Have a great trading week, and thank you for attending. Good luck, happy trading, and don't forget to manage your risk properly. Take care. Bye-bye.